Welcome to another episode of Business by the Numbers. I'm your host, Hunt Emrys, CPA with Parmelis and Associates. So you love that new Mercedes GLA 300 and the dealer really wants you to lease it. So what do? You call up your accountant and say, should I lease it? Should I buy it outright? Does it even make sense to lease it, even though I'm only going to keep it for a couple of years? Does it matter if I'm getting a small SUV, large SUV? And hey, let's throw another wrench in the thing. What if it's a piece of equipment? So buying, leasing, the advantages, disadvantages, and everything else in between is what we're going to talk about this week. Before we get into that, I just want to stop and say thank you to you and the rest of the dedicated listeners. Remember, if you have a question for me, want to hear your question answered on here, or just have an idea for a future episode, I'm always looking for ideas. Shoot me an email at podcast@parmelis.com. Lastly, we cannot forget our dedicated sponsors, NapaTrax and Promotive, for being such loyal supporters of the show. If you want to support the show, support the people that support us, give Trax a call, give Promotive a call. They are sure to help you out, just like they have hundreds and thousands of other shop owners just like you. So to kind of set the stage on here, we're going to be talking about leases versus loans. And it's important to cover a couple of different factors because like I mentioned before, all leases are not created equal. And sometimes depends on what you're actually leasing. And sometimes it depends on what you're leasing for how long. And a lot of people instantly probably think that this is going to be specifically tax related, right? But we need to look at the dollars and cents to make sure that you aren't making a bad financial move just to save some money on taxes. And I'm going to kind of stop right there and I'm going to rehash what I just said there, right? When we're talking about this, when you're calling your accountant, you got to understand the perspective that we're looking for, right? We're looking generally from a dollars and cents perspective and generally from a tax specific standpoint. If you don't like the thought of owning a car outside of warranty, if you don't like the thought of having to resell it, if you like the idea and the luxury of just, hey, I drive this thing for 2 years and I turn the keys back in, your accountant's never going to see that value, right? So keep in mind that when we're talking about this stuff and I'm saying, oh, absolutely, we do a lease there. Absolutely, we do a loan, right? This is my approach. This is my opinion on it. Now, most of this stuff is based in facts, is based in taxes. But what I tell my clients is you, at the end of the day, know what's best for you, right? I know other people say you don't know what's best for you. You do, right? Because it's what you want to do. So if you are 100% dead set on a lease, I don't think that there's anything in this episode that should dissuade you from that, right? And if you're 100 dead set on buying this or financing this, again, there's nothing in this episode that's probably going to dissuade you that way. What it is hopefully to give you some insight on different situations that probably could change your decision. But at the end of this, it's probably going to be a decision that's going to split a tiebreaker, right? If you're looking at this and you're saying lease versus loan, I don't really care, tax might push you this way, right? Or cash flow might push you that way. So this is not the end all be all, right? This is to kind of give you guys some context of, hey, when you're looking at these loans, when you're looking at these numbers and you're kind of weighing your cash, here's what's going on in the back end on tax and tax treatment and things like that. To keep it simple, there's really two major kinds of leases that we're going to be talking about. The first one we're going to be talking about is vehicles. And then after we kind of go down through vehicles, we'll talk about equipment. I know. Wouldn't it be way easier if it's like, well, it doesn't matter if you're leasing a Corolla or a tire machine, it's all the same. No, it's all completely different. And really each of those are different depending on how long you are leasing these things. Why am I doing this episode? You probably imagine I had a client call and I've been talking the last couple of days about this exact issue. Client calls me up. I'll give you the full story on it because I kind of went full circle on this. So he calls me up and said, Hunt, I'm looking at buying a Mercedes for my wife. I'm not sure if I should lease it or own it, right? Lease it or buy it, right? Finance it. He's probably going to pay cash if he buys it, but neither here nor there. So as soon as he called and he told me that, he said, Hunt, which direction would you be leaning on it? And kind of my gut instinct on this is, man, I probably would be leaning towards lease here. Now, at the end of the day, I kind of, after hearing all the facts and circumstances, probably went the opposite and say, I think that you should buy this, right? Or finance it. And we'll talk about that a little bit later. But the reason is because I was making some assumptions, right? And the reason why this is important is because even on the surface, I didn't know enough details about this, right? You need to get more about what's going on, what we're buying here, how long you keep your vehicles. When I looked at this, and there's generally a couple of things on leases. Is it a luxury vehicle that generally doesn't hold its value as well, right? It's a Mercedes, it's European, it's expensive, yes. Do you not like to keep your vehicles that long? Yeah, I don't, right? And number three, do you generally not keep your vehicles outside of warranty or you just don't hang on to them very long? Yes, yes, yes. So if you're looking from a dollars and cents perspective, and again, really one, if you remove the tax and business factor out of this, it's checking all three boxes for a lease making sense, right? He knows he's going to be paying a little bit more, doesn't want to mess with the depreciation hit, not going to have this outside of warranty, and doesn't want to worry about the trade and gamble, right? I'll give you your money. And in the past, he's done pretty well. I don't do a ton of leases, so, take my advice for what it is. Generally, the more money you put down on a lease, the crappier that lease usually is. Last couple he's been able to put no money down and keep the monthly payments relatively similar. So he's going and kind of saying, Hunt, what would you do? Keep it status quo? And more or less, I said, yeah, I would. Now, what I did not realize is how heavy a GLA 300 is. So for those of you that don't know what a Mercedes-Benz GLA 300 is, well, of course you don't, right? Because Mercedes, just like BMW, has now expanded their product offerings to 65 different types of models, right? In every shape and size. I knew the GLA was a smaller SUV. I didn't realize that it was bigger than I thought. So there's one number that matters for vehicles when it comes to taxes, and it's called the gross vehicle weight rating. So if your gross vehicle weight rating, meaning how much is a vehicle weigh plus how much is it rated to hold, fuel, people, everything on it. If that is above 6,000 pounds, you can write off the entire amount in taxes the first year if you buy it, right? Not if you lease it. Now, if it's less than 6,000 pounds, if it's an SUV, less than 6,000 pounds on it, it's treated the same as a car, which means roughly you can only deduct 18,000 in the first year. If we're looking at this GLA 300, right? And we're saying, hey, it's less than 6,000 pounds. And I look at this and say, all right, XYZ client, you're going to be able to deduct around $18,000 this year. If his lease payment is $1,000 a month, for leases, we can only deduct the monthly payment, right? We don't own it. We're just leasing it. And let's say the monthly payment is $1,000. In the first year, we would be able to deduct $12,000. So for vehicles or small SUVs where we're limited on the amount of first year depreciation and we have to depreciate those over a longer time, what we find out is the difference between tax deductions for a loan or, buying this outright and a lease is not really that much. Now, going back to what I was talking about before, this is what I thought was going to happen, right? I thought that this was going to be a smaller SUV. So I said, you know what? Sounds like lease might be the best option for you. Going back to that, when I looked this thing up, I realized that a GLA 300 is a lot heavier than I thought, and that is actually 6,200 pounds. So if I then look at this and say, hey, we can get a $12,000 deduction if you do a lease, right? $1,000 for 12 months, that's going to be our deduction. However, if you buy this, whether you buy it with cash or you finance it, because for depreciation purposes, it does not matter, it's yours, we can deduct the entire cost this year, right? And so it went from looking at this of, hey, client, it's about 50-50, take your pick, to, hey, you still check all the boxes to do a lease. I will be honest with you, right? Don't like to keep these cars, don't like to mess with them out of warranty. All of this makes sense for you. From a tax perspective, it could not be more of the exact opposite. If we're looking at the first year tax savings for a lease, we're going to pay 12 grand. We'll probably save around 3 to 4 grand in taxes, right? Again, if you go out and you finance this, you're probably going to pay around $12,000 in monthly payments, but we're going to be able to depreciate $60,000 or $70,000. Our first year tax savings is probably going to be more than we actually pay. We'll probably save $15,000 to $18,000 in taxes alone. That is pretty much, the most extreme example that you could get there. And that's something where we went back and I was talking to my client on that he's having a real hard decision because where he was on that spectrum of lease versus buy was very, very strong on the lease. And like I said, the taxes are a major consideration for him and it skewed him over. Is he going to do this? Maybe, maybe not, right? At the end of the day, we're going to get a deduction for anything that we paid, whether it's a lease or a loan, right? The idea behind the loan or paying for this stuff cash is you get to front load the deduction. You get to get all of your deduction when you're spending that money or when you're committing to spending that money. Unlike a lease, if you're going to get to deduct it as fast as you can pay it. The most extreme example of this would be something at the end of the year. A little bit different since we're talking now in January and probably February when you actually listen to this, because no matter which way you go, you're going to get a pretty sizable deduction over the course of 2025. The difference is end of year. No one ever goes and signs a lease at the end of the year because you don't get any tax deduction. If I go and I sign a lease on December 31st and my first payment is not due until January, there's nothing I even need to tell my accountant because that vehicle lease is not going to show up or be deducted. Yet, if I was to sign on the dotted line and finance that vehicle, even though my loan payment is not due till January on it, whatever day I sign that paperwork and take delivery, I can deduct the entire cost at that moment. If you pay $50,000 over the course of 3 years for that lease, or you get a one-time deduction for all of it up front, you're going to get the same deduction. Buying it is going to give you that instant gratification first. What kind of stuff do I generally see for shops for leases? The short answer is not a whole lot. In this industry, we just don't really see that much leases on the books because most of you guys are buying large or unlimited vehicles, right? The most common thing that we see you guys buy are trucks. I don't think I've ever in my life seen a tech or a shop owner lease a truck. Generally, no one likes to lease trucks because they hold their value really well, so it's really expensive to lease. And a lot of times people that buy trucks like to keep them longer than 3 years anyways. Things that don't have a big depreciation curve. And then also, remember, we get really, really favorable tax treatment on large SUVs and trucks. Since we get that big first year benefit on it for the industry, we just don't really see much leases. Now, the leases that I do have on the books, what are they? Almost exclusively luxury vehicles, right? S-Class Mercedes I have on there. I have a guy that leases a Jaguar. I know. I don't know. He does. We got a couple BMW leases on there and a handful of smaller ones. If you keep your eye out for some of the cheap vehicles, right? For a little bit, we had a lot of clients leasing some Corollas and leasing some Jettas to use for loaner cars. I haven't seen it as much because I think that some people got it a little bit in trouble for renting out or, letting their customers use leased vehicles. Don't quote me on that one. Again, do your own due diligence on this, on your own research. But in the last couple of years, we see, a handful, less than 10 of all of our clients in the last 3 years. Just not super common. Personally, super common, right? Personally, for leases, you're not getting a deduction whether you buy it or lease it. Business is completely different. You like having newer vehicles, still in the business, don't want to mess around with it. Hey, what do I know? You know what's best for you. Ignore the taxes, talk to your accountant, make sure that you have all the facts on it and make the decision that's best for you. The vehicles are a little bit more complicated for obvious reasons. And there's actually a couple little things even inside of there that we didn't get into, right? So I know the wheels are turning. I've talked about this in the past and I've got these messages. No, if you go out and you lease a $4,500 a month Bentley, you're not going to be able to deduct the entire cost. Nice try, but there's rules against that too. What are those rules? If you want to look it up, it's luxury car limits. Not often followed by the book, I will be honest with you. But yeah, you can't just go out and get the most expensive vehicle that is really heavy and write off the entire amount. Sometimes you can. If it's a G-Wagon, you're good. If it is a S-Class or Maybach sedan, you are not good. Unless it's a limousine, then it gets even weirder on it. This stuff, like most things on it, I want to keep you guys aware of the facts and circumstances that will really affect you. If you are thinking about diving deep into this and you have kind of an obscure one, as always, reach out to your accountant. If I'm your accountant, reach out to me. I'm going to go through your specific situation. If I'm not your accountant, reach out to your accountant because, again, no one can really kind of get blanket advice on this. I'm giving you, a 1,000-foot view. You need someone that's actually looking at your numbers, your business, your goals, your history to truly give you the right answer. To wrap this thing up, we need to talk about equipment, right? If I say we almost never see a lease on vehicles, almost everything else is a cash purchase or a finance. Equipment is probably the exact opposite for you guys. For every 8 leases that we see for an alignment rack, I see 2 lines of credits or cash purchases. Leases for the equipment industry and automotive are extremely, extremely, extremely common. Now, the good news for you guys is they are leases, but only in name. These are truly leases, and if you look at the paperwork, that is not yours until you make their last payment. The reason that they do that is just if you stop paying them, it's not yours. They can come take it back at any point. Another reason that they do that has to do with financing, has to do with you guys are already committing to the interest on it. It's a different way that they treat it on their books. For tax purposes, though, if you finance a lease-to-own piece of equipment, right? The most general thing is a 60-month financing where that last payment, you give them an extra $1 and that becomes yours. If you have those, even though it says a lease, that is going to be treated like a loan for tax purposes, and you can write off the entire amount of that equipment in the first year. The reason is of how long this lease is. Think about car notes. Those are almost always 36 months or less. It's what the IRS considers a short-term lease. They also call it an operating lease. 3 years or less, and you don't get to keep the piece of equipment or vehicle, it's an operating. You deduct the monthly payments. Longer term, and the title passes at the end, even though it's called a lease, we still get to treat it and deduct the entire amount. Since we don't really ever see operating leases, we used to see them every once in a while, like copiers. Like no one ever owned a copy machine. Even, Parmelis, we had lease copy machines over the years. That's the only thing that I see on a couple clients. Why they have copy machines? They're mostly dealerships. Dealerships and doctors' offices are still keeping the copier business alive. But when you're looking at something alignment rack, you generally have two choices. You can finance it with the bank for 5 years, or you can lease it through the vendor or related party for 5 years, right? These are your two choices. And if you're faced with these two choices, just like we're talking about with a vehicle, what would you do? So like we just learned from a tax treatment, they are treated exactly the same, right? Finance it with a bank or go out and get a lease through Great American Financial for 5 years. We're still going to be able to write off both this year. It doesn't matter. So how would I decide if it really doesn't matter for tax purposes? At the end of the day, all this comes down to whose money is cheaper, right? We're going to get the same piece of equipment. Whose money are we going to use in the meantime? Generally, when you look at this, banks' interest rates are going to be cheaper than a lease. Leases almost generally never give you the actual interest rate, but look at what your monthly payment would be for the same term and compare it to the lease. If the lease is $1,200 a month and the bank is $1,000, then you know right off the bat that the lease is going to be more expensive. If we're looking at this and we're looking at this from an objective standpoint, the benefits of a loan are everything, right? There is no advantage to leasing a piece of equipment other than one, and it might be enough to outweigh everything else. So banks are generally lower rates to start off with. You can refinance these. If you end up paying it off early, you don't have to pay the full interest amount on it. The only issue is these take a lot of time, right? If you want to go to a bank and a bank will give you a loan for just about any equipment, if you have decent credit and decent income, but it could take 30 days. They're going to ask you for everything. They're going to ask you for the blood of your firstborn child, right? We've all been through it. Now, on the other side, what is the benefit of a lease? You could sign the paperwork and you can be done with it generally that same day. And honestly, 80 to 90% of my clients, they just go that way. If I'm looking at this and I'm saying, hey, this is going to be $1,000 for me, or it's going to be $1,015 if I go through a bank, maybe I'm just going to take the lease. What we've seen over the last couple of years, especially as interest rates for banks have gotten higher, that there's less of a discrepancy between the two. Also, these leasing companies sometimes are also the company selling the equipment. So they kind of have profit built in on two different levels, and you end up getting what looks like a relatively cheap lease, and it's not. They just kind of build more profit in the back end. At the end of the day, if you're looking at this, it's all down to money and time. If you're going to save a massive amount of money by going with a bank or equipment line of credit, then it's probably worth your time. If you're going to save a couple bucks here or there, a couple percentage points on it, you, like most other people, might realize, hey, you know what? I might be committing to more interest. It might be a little bit more expensive, but the easy button of just signing this lease with Great American and being done is just too easy to pass up. But like anything, it never hurts to ask, right? Have a relationship with the leasing company. Find another leasing company. Find a couple banks, because really the biggest mistake that you can make on this is not doing your research and not seeing what your options are, right? If you have one option, you have one option. If you have five, you're obviously going to be able to pick and choose, leverage those against other ones, and really kind of get a judge of how good or bad what you're looking at is. One little quick tidbit before we let you go on here. I was just talking to a client the other day, talking about just this and going to a dealership. And he was under the logic that I think a lot of people are of, dealers love cash buyers, right? Hey, you don't have to worry about financing or getting me approved. I'm a cash buyer. And what he found out was cash buyers are not attractive. And the financing guy even explained it to him of, hey, we make money on the financing and sometimes even more money than we do on the car. So long story short, he ended up getting a $68,000 BMW for $65,000 because if he paid for it cash, it was $68,000. If he financed it through BMW Financial, it was only $65,000. The finance guy was cool enough to tell him this, and he had to keep it, I forget. I think it was like 2 weeks to get the credit. Sure enough, 2 weeks later, he paid off the loan. He did have to pay some interest. I think it was $35. But just by getting the loan through the dealership and paying it off 2 weeks later, he saved $3,000. So take a look at this stuff. A lot of this changes all the time, but rebates, different things like that, promotional items can always change the game on this. Do your research, make sure you know what your options are, and make the right decision. Please share with friends. If you have any questions, comments, or ideas for a future episode, shoot me an email at podcast@parmelis.com. Thanks for listening to Aftermarket Radio Network. I hope you check out the rest of the shows on the Aftermarket Radio Network as well. So thanks again for joining me on Business by the Numbers. Stay safe out there, and I'll talk to you all next week.